Hey everybody, Chuck Barone here. It is Monday, May 13th, 2024. Back at the desk. I apologize yesterday, guys. I had that conference. I didn't do a show on Friday, and the conference ran a little longer. I did not get back in time to get a show up yesterday. And I did bring a little bit of a souvenir with me. I got a nice cold here, so you're going to see me like sweating and blowing my nose today. It's nice little souvenir to bring back. Anyway, before I get rolling, let me take a half a second. Welcome everybody to the show. And as always, guys, really thank you all for your support. Nice to see everybody on this thing waiting. My friends Salty and Attila, they're always number one and two. Got Jose on today and a few others. It's nice to have everybody here. We got a lot to talk about today, man. It is going to be a big week this week, guys. So let's get into it. Markets today were kind of a weird day. It's quiet. We know we have a ton of data coming this week. Very important stuff. So the markets were kind of mixed today, taking a little bit of a breather, trying to people realigning some money around with how they figure these numbers are going to go this week. It's going to be madness, guys. Get ready for this. We'll go through everything that's expected. But first, let's talk about these markets today. So, as I said, the markets are waiting with holding their breath right now. So the markets were kind of quiet. The Dow falls 81 points, snaps a nice little winning streak they had going. I think there was 8 or 9 days in a row the Dow was up. Not today, guys. So the Dow falls 81 points, 39,431. The NASDAQ gains 47 points, 16,388. The S&P falls just 1 point, the broader market. That's the one I typically am going to be watching. Down 1 point, 52.21. So really just a big nothing burger as far as the stock market today. Quiet. I think it was a low volume trading day, and everybody's waiting because the fund's going to all start tomorrow. The bond market, also another quiet day, not really much happening. Actually, the 10-year actually rallied up a little bit, falling 2 basis points, 4.48% in the 10-year. The 2-year unchanged. Wow, that's a surprise. That doesn't happen often either. 4.87% on the 2-year. So bond market quiet too. Dollar today, I guess these are the bets that inflation is going to be, the numbers are going to be good. So the dollar falls not much, just 10 basis points on the index, 105.22 on the dollar index. Precious metals today, kind of a weird day in metals too. Gold falls today, down $24, $2,336.70. Silver gains 2 cents today, $28.25. So still, guys, good, solid numbers for gold and silver. It's, I think that this rally, as I've been telling you guys, this is just the beginning of this rally. It's going to go higher. We're just waiting for the data that works for precious metals, right? The dollar being so strong, it's astonishing to me that gold and silver are rallying at all. Rallying in the face of the strong dollar tells us a lot. Don't forget, we have all the central banks buying up gold by the ton, which is not hurting the price either. So gold and silver taking a pause today, but look for that rally to continue. Oil today rallies up. My nemesis up 94 cents per barrel, $79.20 for a barrel of West Texas Intermediate. Still more saber rattling. We need Israel and Palestine to go away, guys. Let's get that out. Let's finish that. That way we can get our oil prices back down, get gasoline prices back down, and get things a little more manageable on the energy front, right? Bitcoin today rallies up $1,905, sitting at 63,104. Still a good, strong number. Still down about 10% from its high around 70,000. But a good, strong number. It looks like now it is building support at 63,000, which is really good for Bitcoin in the long run. Let's see how long, if it continue to hold that support and keep bouncing like it has. If it breaks through the other side, well, we'll see where Bitcoin goes. But I still think Bitcoin has a way to go too. I was reading a little bit about the Hong Kong ETF. They're just getting it up and running. If the Chinese come flying in with people buying Bitcoin, you could see Bitcoin at 100K. Truth. It's just all that money. All right. So that's the markets today in a nutshell. A big nothing burger for the most part. Tomorrow it all starts. So let's look at the data we're going to get. As I do every Monday, I kind of go through this stuff. So tomorrow starts it off. Tomorrow we will get all the PPI numbers, top line core, all breaking it down. PPI is very important, guys, because PPI, basically, usually that comes after CPI. It's weird they're reporting it this way this week. So anyway, PPI, the producer price index. So this gives us an idea of inflation at the wholesale level, right? So typically, if PPI, the numbers are bad on PPI, we can expect bad numbers on CPI in a month or two as those price increases for wholesale numbers trickle down into the consumer, the retail economy. So PPI is going to be huge. Plus, Powell tomorrow. Powell will be speaking at some symposium. And every time that guy opens his mouth, we have the opportunity to see the market go wild up or down. So that's tomorrow. On Wednesday, we're going to get another batch of big numbers. We're going to get the CPI numbers. And those are, there's really no telling where we're going to be on PPI, CPI. Last month, I think CPI came in at 3.5. PPI was worse. That kind of has set everything back. Now the markets, they want to rally. They're just so enamored with these rate cuts. They're grasping at any little bit of data they can to support a rate cut. See, this CPI and the PPI from Tuesday are going to give us a great idea of where inflation's at and where it's going. Also on Wednesday, we're going to get retail sales, which are expected to be down. We're going to get business inventories, which are also expected to be down. And we're going to get the builders' confidence. We all know what's happening with real estate and residential housing. It sucks. And builders' confidence is expected to be down as well. On Thursday, we're going to get, like we do every Thursday, jobless claims. Expected to come in at 219,000 this week. It was 231 last week, a number much higher than they expected. So we'll see where that goes. As you guys know, and I've been telling you, the Fed really feels like this hot labor market is a big driver of the inflation. Hot labor typically means rising wages. Rising wages mean more people spending more money, inflation. So we'll see where jobless claims goes. Also on Thursday, we're going to get the Philly Fed report. That's an important one, guys, because it's typically pretty accurate about where consumers are feeling, with where they are. It's also pretty accurate about where wholesale and businesses are at. It's going to be a really important report this time. So we'll see what that one has to say on Thursday. Plus, we're going to get housing starts and building permits, which are both expected to be down. Real estate, like I said, it just sucks. Also, Thursday, we're going to get the import price index, which is expected to be higher. We're going to get industrial production. I got no any kind of idea of where they're expecting that. And also, we're going to get capacity utilization on Thursday. So these are all huge, huge economic data that we're going to put all of this together, and we're going to come up with what we really believe is happening right now. And then on Friday, to finish it off, we're going to get the leading economic indicators. Those are always an important thing because that tells us how the consumers are feeling. Are they wanting to spend money? Are they wanting to borrow money? Where are we going with the economy? How are consumers feeling about it? Are they confident? Should be really interesting data. Now, as I've been saying, we've got a critical week coming up here. Important data coming out pretty much every day that's going to kind of give us an idea, a very clear idea on what's going to be happening with rate cuts. As I've been telling you guys my own theory of what I believe. I really believe that, the Fed's going to have some difficulty getting rate cuts in before the election. I see one cut this year, maybe in December. Okay, now obviously that's always subject to change. I was looking at some of the data that was coming in last week, all working. Yesterday was the perfect week for the Fed. All the data came in the way they wanted it to. It was all pointing to a softer inflationary number and an environment where maybe the Fed could move toward cutting rates. The Fed is pretty much already, with the language they're using, ruled out any rate hikes. Okay, so they don't see that coming. So we'll see now if this data confirms what we saw last week. I got a feeling it's not going to, guys, okay? So it's going to let us know rate cuts. It's going to let us know where the economy is right now and where it's going. This for the second half of the year. It's going to really, really, really be I can't tell you how big of a week it's going to be, man. And as I said, last week was the perfect. You saw that consumer sentiment number? Horrible. As I got that note here, we're going to talk about that. That's next. It's this week. I can't tell you guys how critical it's going to be. Now we're going to see the markets react to this, so get ready. And if you guys have money in the market, get ready to see it kind of whipsaw back and forth all over the place as this data comes out, because it is just a ton of critical data. As quiet as it was last week, we're going to get a shitstorm of it this week. It's going to be fascinating to see where it all heads out. Everything gets off tomorrow, starting with that PPI number. 5:30 a.m. Pacific time, I'll be sitting in front of the Bloomberg, waiting to see what that number comes in at, because it's just so critical, guys. When I know numbers like this are coming, I literally can't sleep. I'm like, I don't need an alarm to get up at that hour, because I want to see what those numbers are going to look like. And I got a feeling we might get a surprise or two up to the up or down. I mean, these numbers have not, the inflation numbers have been kind of all over the place, trending the wrong way, I might add. So maybe, what do you think? We get a little bit of a good news, and rates come down a little, CPI rates come down. If rates go up from 3.5 and they edge up toward 4%, Katie, bar the door, man, it is going to be a nasty, nasty business. Anyway, so critical week. As Jose mentioned, consumer confidence just crashes, totally tanks. University of Michigan, a big deal. Okay, this is one of the more accurate surveys. What they're saying is consumer sentiment had a reading of 76 last month. Or they had called for a reading of 76. Came in at 67.4. That is a huge miss. Consumers feeling way more skeptical about the economy, feeling like inflation is going to stay higher for longer. They actually are expecting inflation to still be 3.5% a year from now. That is not good news, guys. When people start to expect inflation baked into the economy, it becomes a self-fulfilling prophecy. And that is bad. All of this bad news for President Biden, who is going to probably get his clock cleaned if he can't get this economic stuff in order. The truth of the matter is, if Biden was running against anybody else, this race would already pretty much be over. Hard to win a presidential election when you're facing inflation, you're facing pissed off consumers, everything looking bleak. People can't buy houses, rent's too much, car prices too much, people drowning in payments. And I've warned you guys all along about that stuff. Everybody's talking about, you listen to these other podcasters, other YouTube guys, and they all want to point the finger at the government. The government's the bad guy. The government's out to get you. The government wants to make you a slave. Bullshit. It's not the government or the puppets for the real people pulling the strings, the multinationals, the huge corporations, and the wealthy. Those are the guys paying the bills. Those are the guys funding all the elections. Those are the guys calling the shots. It's just that simple. So what do they want? They don't want you broke. They don't want you living off the government. They don't want that at all, okay? What they want is you to owe them money. They want to sell you stuff on credit. They want to get you on a debt treadmill. They want to keep you on that debt treadmill for the rest of your days, where you work, okay? And all you get to do with that work and the money that it earns is to pay bills. You work Monday through Friday, you get your check on Friday, you pay your bills, you have your little bit of money left over for the weekend. You go Monday, you start the whole process all over again. Debt slavery to the machine, man. These guys want you to consume, however, by whatever means necessary. Spend your paycheck, spend every penny you got, drain your savings, borrow into the future so you can keep them wealthy. Be careful, guys. As I've been saying since day one of this show, debt is the enemy, even though our society is built on debt right now. And you can see where it's all leading. The government paying $1 trillion a year in interest, consumer debt at record highs, business debt, record highs, every kind of debt, record highs. Guys, this never ends well. All of these debts will get repudiated sooner or later, one way or the other. Nobody's going to pay back $34 trillion fucking dollars. Sorry. Consumers are going to go bankrupt in droves, especially if this job market tanks. Businesses are already, there's more defaults on business loans this year than there have been in the last 5. So get ready, guys. It's all coming to a gigantic head. Now, I'm not sure if this is going to be the week with all these numbers coming out, but trust me, it's all coming to a head soon. There's a recession coming. And what do we got? We got our knuckleheads in Washington. We know we got an election. What are these retards talking about? They're talking about tax cuts. Guys, as much as I would like to pay less in taxes, I want the government to be able to pay its bills, not have to borrow for every little thing they need. Tax cuts, I don't care what anybody says, tax cuts are spending money. The government can't afford to have a tax cut. We're already going into debt $1 trillion every 100 days, guys. It's crazy. It's madness. And are they trying to fix the problem? No. No, they're trying to make the problem worse because they're imbeciles and they're doing, like I said, they're doing what the money is telling them to do. Just that simple. If you're a Brazilianaire, do you want to pay taxes? No. Now we got some of the more radical taxers, Bernie Sanders, talking about every dollar over $1 billion in income, 100% tax. Well, what the hell? Who's making $1 billion in a year, man? And here's the bad stuff, guys. Debt is fueling the economy. Debt is all there is holding this economy up. Debt is keeping the whole thing going when that source dries up, or when people just get tapped out, or just get sick of borrowing money, which I hope you guys are, man. I hope you guys have really heeded the message here, because those 2 big things we talked about. Number 1, getting out of debt, staying out of debt. Number 2, building up your $25,000 FU account, just in case you got to tell the boss FU, right? Having that stuff, you have those 2 pieces in place, you're on your way to freedom, guys. Because now you don't have all those payments every month. So you're going to have some disposable income every month to save or to spend on something that's worthwhile. And you're not going to be in that trap, which is so important. Anyway, guys, I've been rambling. We got a huge, massive week coming up. I appreciate all of you guys here. You think credit's tight, Donna? Well, it is. But what's going to happen is if they loosen it up, that's inflationary. So they have to keep credit tight. And I'm telling you now, get ready for this. It's the new normal. Once they start cutting rates, they always look for the neutral rate, right? The rate that's not going to make the economy boom and the rate that's not going to drive the economy into recession. I'm telling you right now, if you heard it here first, the Fed funds rate will never again go below 4%. Just the party's over as far as debt goes. Anyway, I'm already at 19 minutes. That's it for the day, guys. I love you. I appreciate all of you guys here. That's right. Oh, no man, nothing. Anyway, tomorrow's another day. We'll be back here. Hopefully, I'm feeling a little bit better tomorrow, man. I got this runny nose and sneezing and coughing. It sucks. But hopefully, I'll be better tomorrow. I'll be back here either way, guys. I appreciate your support. If you can, guys, please hit the like button. It changes the algorithms around. It gets our video out in front of a few people, a few extra people every day. And that's important to us because it gets our extra views for the show. Those extra views get the video out in front of more people. It starts a cascading effect. That's where we want to be. Guys, I appreciate your support. I'll be back tomorrow to bring you the news you need. Hit me up in the comments. I'll be on there today answering questions. In the meantime, guys, till tomorrow, take care. Thanks.